And we're recording, so Scott, all yours.
Awesome. Well, good morning, everyone. Happy Monday. Hopefully everyone had a wonderful weekend or tried to have a good weekend with all the stuff going on. My name is Scott Rogowski. I'm the director of the Finance Center for Northern California SBDC Network. This is our weekly updates, disaster loans, and now fire updates, as well as some other updates that we have, but mostly today is the disaster relief loan update and fire updates from SBA. And this is our 59th session, as you heard from Alan earlier. Today is Monday, September 14th, and we are all in this together. Northern California SBDC Network, we cover the most 36 northern counties of the state. We go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area. We go southeast to Stockton, then back up through the Nevada-Oregon border. We are federally funded by SBA, Small Business Administration. We have 2 offices in our region. We have one in Sacramento, or Citrus Heights, but for the Sacramento area, northeastern. And we have the North Coast, including the Bay Area and San Francisco. And in the state of California, we are also funded by the Governor's Office of Economic Development, which is called GoBiz. And because of this funding, we come to you at no cost. We come to business owners at no cost, whether you're starting or growing or trying to survive COVID or the fires or whatever it takes to run and operate and thrive and sustain and grow your business. We are here for you at no cost. We offer one-on-one advising, 100% confidential, and then we also offer these educational webinars and workshops for you. The Finance Center is a division under the Northern California SBDC network, and we specialize in helping businesses access capital, whether it be regular capital before COVID or fire capital as we're experiencing now. And again, I'm the director, and then Sunita Maharaj, she's the associate director, but she is on vacation this week. So quick agenda, we'll go over our amazing disclaimer that we love talking about. We're gonna go over the EIDL PPP parameters, very high level. There's other money that is available to you outside of EIDL and PPP. The PPP required documents, just high level overview. And then we have Heather Lutzy from the district office of Sacramento district office. She's the district director for the Sacramento district office in Citrus Heights. Sorry, Heather. Heather Lutzy is going to talk about SBA updates, which also includes fire updates. And then there's an expiration of a loan support that ends this month. Upcoming webinars and then Q&A. So quick disclaimer, things are changing all the time. This information was correct when we put it together, but things are changing all the time. I know that Heather's team sent out a new email this morning where things actually did change. So she's gonna go over that or update it. EIDL is accepting, so EIDL is Economic Injury Disaster Loan. They're accepting applications for all businesses, or most businesses, including 501c3, C4, and C6s. So 3 different types of nonprofits, and then all types of businesses, agricultural, sole proprietors, all industries that are normally approved through SBA. Nothing that's non-federally regulated. EIDL Advance is closed, so you can no longer get the advance. Please do not hesitate to apply for the EIDL. Depending on what anybody says to you, please do not hesitate to apply for the EIDL. It is still open, still around. This is COVID EIDL, not fire EIDL. Heather will go into that later. PPP, Paycheck Protection Program. So all those applications, they expired on August 8th, which is over a month ago. But as we move through the rest of the year, you can still spend your money if you have it. And then you could, as we approach the end of this year and jump into next year, we'll learn more about the forgiveness. And then there's a small disclaimer below that. So all of you have access to this PowerPoint. Alan sends it out religiously every week or a couple times a week. So this is a chart that we go over. It's just a side-by-side comparison of the EIDL and PPP. I usually go line by line and talk about this, but I'm just gonna have you view it really quick. There's EIDL, there's PPP, there's different parameters around rate and term, payment deferral, collateral, forgivability, and then what you can spend the money on and what you can't spend the money on. But I'm not going to go through that too much.
There's a link to download that in the chat right now, so people can see the whole deck in the chat if they want to pull it out.
Okay, awesome. Thanks. So other money is available. There is still state guarantee money. So SBA is federal guarantee. There's regular SBA 7A and 504 money out there. And then there's the EIDL direct money. There's also state guarantee money that is state guaranteed instead of federal guaranteed. Those are from local lenders. Those loans are between $5,000 and $1 million. So if you did not receive as much as you thought you were going to receive on EIDL or PPP, or you already spent it and you need more, then state guarantee lending may be best for you. There's an EDA direct loan fund locally in normally like the Sacramento North area, around Sacramento, El Dorado, Placer, Yolo, or Nevada counties that you can apply for, up to 150. So that's in addition to PPP and EIDL, or if you decline, you can try to get this money. Startup or expansion capital, if any of you are starting or expanding, we're here for you as well. And then there's a new California State Direct Loan Fund. I think it's called California Rebuilding Loan Fund, that launches sometime this month. They're doing this is through a lot of different collaborations from government at the governor's office in California to local lenders and local community investment organizations, nonprofits, to bring together some money that can be directly lent to business owners. I think they're starting with $100 million worth of funds. So this is direct money. It's not a bank, but I think it is going to be state guaranteed. So we're going to find out more hopefully later today. So there's that. As far as the documentation for PPP, these are the links. Alan does a great job of posting these in the chat. So this is where you find the application for forgiveness, and then there's instructions on how to fill out the current application. There may be different renditions or versions as we move further down throughout this year and the beginning of next year, because the forgiveness of or the payment deferral is not until next year, until between March and June, for you to have to make a payment for even the first tranche of PPP. So we're still waiting for some possibilities of a shift or different changes or enhancements to the application. General PPP FAQs, so it talks about sole proprietors, the loan forgiveness application, the 3508EZ form, talks about the 10 months of the completion of the covered period, not required to make any payments until the forgiveness is determined by SBA. So there's a lot of things in the PPP that for the application, the Treasury, the SBA, that is all leaning towards that we have a lot of time to figure this out. We don't have to rush to fill out the paperwork. We don't have to rush to start making payments unless you want to. But if you're not sure which decision is best for you at this time for your business, please reach out to us. We can help you make that determination. So I know that was quick. It was about 7-8 minutes as far as updates. As I mentioned before, there hasn't been a lot of changes in the last couple of months, so there's not like a lot of new information coming out. So we made it to the SBA part, so Small Business Administration. Again, we have the District Director for the Sacramento office, Heather Lutzy, on the call today. We're very excited to have her, and she's going to talk about SBA disaster updates as well as any fire updates. So, take it away, Heather.
Great, thanks, Scott. It's my pleasure to be here today. Thanks so much. I wish that the air was clearer and that these fires would go away, but it doesn't look like it's anything that's going to happen in the near term anyway. With respect to the economic injury disaster loan, I think it's important that your listeners understand that there are separate applications and separate interest rates, separate terms between the loans that are designated as wildfire loans or the fire loans and the COVID-19 issues. So two separate platforms are actually available for the applicants to apply on. As you kind of alluded to, Scott, with the economic injury disaster loan through the COVID situation, interest rates are set at a 30-year term, 3.75% for profit businesses, 2.75% for nonprofit businesses. With the fires that are currently under a presidential declaration, those are actually less. So there are two different types of those fire loans as well. And I know that this is going to get a little bit confusing, so I'm going to try to go through this as best I can. But please feel free to ask questions, and we'll try to get to as many of those as we possibly can. With respect to the fire loans, what SBA's job is actually to supplement the insurance that, or the insurance deficiencies. So first off, if you've been unfortunately affected by these fires and have lost either personal property, business property, or real estate, SBA can assist you. We typically, this is kind of our typical MO in any year, we support the disasters around the country and the U.S. territories. And the way that we do that, as far as SBA, we work in conjunction with FEMA, our Federal Emergency Management Agency. And what happens is we're called in as SBA to assist them in assisting these businesses and homeowners and renters to getting back to pre-disaster positions. So in any typical year, we typically have either floods or hurricanes. Unfortunately, now in California and most of the West Coast, we've got these fire issues, and that's really been exacerbated the past couple of years. With respect to SBA's transactions through those economic injury disaster loans, on home loans, we actually offer an interest rate of 1.188%. So as you can tell, that's clearly way below market. But I want you to keep in mind that, again, it's a supplement from what your insurance does not cover. It's not in addition to what your insurance covers. So what happens in these scenarios is that we work with the insurance agency and the borrower applicant and come up with a course of action or a plan for those particular loans. Keeping in mind that each loan is really not a one-size-fits-all. These are really catered to the actual individuals. The terms are typically set, they can go up to 30 years, but they're typically set with what the borrower is able to pay each month. And again, taking into account any mortgages or existing liens on the property. Again, home loans at 1.188%, business loans at 3%, and again, this is for physical loss. Nonprofit organizations would be at 2.75%, pardon me. And then for the economic injury associated with the actual fire, business and small agricultural cooperatives would be set at 3%, and then nonprofit organizations at 2.75%. Another thing to kind of keep in mind in the fire disaster declarations, we do look at credit available elsewhere. So what that means is that if an applicant has the ability to gain access to capital through some traditional channels, then we would presume that they would move forward with doing that. If they still wanted to come to SBA and go through the SBA process, we can still accommodate those requests, but there's differentiators as far as the interest rates on that. So I'll just give you an example. When I talked about the physical disaster home loans being set at 1.188% for up to 30 years, if the applicant business has credit available through other channels, then that interest rate actually gets set to 2.375. So again, those could be up to 30 years, still very palatable and below market rates when you're looking at kind of the whole scheme of things. But we do take these other considerations into account. The other thing that I think is really relevant to mention is that even though through the disaster channel, and in particular with these wildfires, we do still look to the borrower's propensity for repayment of debt when we're underwriting these transactions. So it's definitely not an absolute that the borrower qualifies right off the bat. It still is utilizing taxpayer dollars, and we have to be good stewards of those taxpayer dollars and make certain that these applicants have that propensity to repay debt. Of course, if there's an isolated incident in the borrower's credit history, such as a foreclosure or a bankruptcy or something along those lines, we would look at those on a case-by-case basis and then take into account any circumstances surrounding those issues. So if perhaps it was a medical reason or something along those lines, then typically we can overlook those as long as we can document those well enough. What else I'll kind of mention is that with respect to partnering with FEMA through these disasters, we currently have, and this is information as of 7 p.m. last night, we currently have almost 3,500 home loans that have been referred to us through our FEMA partners. That's not direct contact with SBA from the applicants, that's the referral from FEMA. Business and economic injury disaster loans, again referred from FEMA, is currently at about 1,480. And again, that's just for these fires. So we've got a total of almost 5,000 referrals or applicants from our FEMA partners. With respect to underwriting these transactions, they're done in a different fashion than your normal what we're kind of used to over the past 6 months or so is the COVID underwriting. There's actually a different application process altogether. It's a different link through our website, and you can find both of those channels through the SBA.gov website. For coronavirus issues, obviously you click on the coronavirus, and then for disasters, please click on the disaster link, and that will walk you through the application. If you have any trouble or questions about the application, please feel free to either reach out to your Small Business Development Center, who's hosting this event, or to your local district office, whether that be in San Francisco under Julie Klaus's directorship, or in the Sacramento region under mine. So at this point, basically, as I stated, the updates for the fires. Last night, the update did include Butte County. So what happens is, when we get these disasters, we go in and look at the specific geographies, and we'll designate specific cities within that area, wherever the fire is affected. So those cities would be covered under the disaster declaration. We then look to the outskirts of the area or the adjacent or contiguous counties to add those as appropriate. In the case of Butte County, we have added that as of yesterday, September 13th, for individual assistance. We are actually working with Congressman LaMalfa's office to get the word out on this as well as the SBDC up in the Butte and Chico area. So with respect to, again, updates, infrastructure updates are that the power or public safety power shutoff, it's a PSPS, is currently in Siskiyou County. It's potentially affecting about 25,000 customers is our understanding. The Creek Fire is also of concern because of its proximity to the Big Creek Fire. because of its proximity to the Big Creek hydro generation power plant. With that said, obviously we've got teams on the ground that are trying to protect those resources, but it's really something to keep in mind, just being prepared for situations such as this. So even if you're not directly affected by the actual fire, typically you're going to be affected by not only the smoke that I think we're all experiencing here in Northern California, but also by these potential power shutoffs. I did have the opportunity to speak to an economic injury disaster applicant on Friday morning, and he had actually lost his home. Very unfortunate situation. He stated that his home could have been saved had he had power to run his well. So really something to kind of keep in mind when you're thinking, at disaster planning, because quite frankly, a generator would have helped save his home. And it's just kind of those afterthoughts that unfortunately we should have at the forefront of our mind during these types of incidents. And honestly, even if you never use it, at least you've got kind of that peace of mind to have it. In any case, what else can I tell you here? The fact sheet for the presidential amendment of the disaster declaration actually covers areas of Butte, Lake, Monterey, Napa, San Mateo, Santa Cruz, Sonoma, and Yolo counties. And now with the addition of Butte, that's been updated as of yesterday. The contiguous California counties would be considered as Alameda, Colusa, Contra Costa, Fresno, Glen, Kings, Marin, Mendocino, Plumas, Sacramento, San Benito, San Francisco, San Luis Obispo, Santa Clara, Sutter, Tehama, and Yuba counties. So clearly it's a majority of Northern California that's really affected by this. And as small business owners, as homeowners, as renters, we just want you to know that the SBA is here to support you in your time of need, and will assist you in walking through these processes the best that we're able. Again, the SBDC has just been a wonderful partner of ours, and we're so, so grateful for their support and for these weekly training sessions to kind of get that word out. At this point, those are kind of the updates that I have. I would love to be able to answer some questions too. Scott, I'm not sure if you've got additional questions, or Alan, but that's kind of the update.
So Heather, yes. One thing I can do, folks may be aware that last Thursday we held a full hour specifically on the fires. So I'm going to put into chat now where you can go to see a recording of that. And also we put together a document that your colleague from the Office of Disaster Systems shared a whole bunch of resources. So I put together a document with the links to all of those. So that's also in there. And what we'll do is we will update that. If you send me, Heather, the updated map, if you have one, and the updated the declaration, I'll include those into that piece so it gets updated for anybody who goes to that after later on today.
Sure. Hey, Alan, this is David Castaneda again with the SBA office. I work with Heather. She's my boss. And one thing she mentioned was disaster preparedness. And I was just looking on our SBA disaster preparedness website. And I think this might be really good for the consultants to take a look at this. And I'll put this link on the chat box because it was a little difficult to find. But for example, they do have a webinar, 12 Steps to Preparedness for Any Organization. That's today on September 21st, the top 10 most common mistakes during a crisis. And so they have others that are coming up. But I was looking at some of the past ones that were the webinars that they had, and they have them on demand so you can watch the recording. And one of them is simultaneous disaster preparedness, wildfires, power outages, and pandemics. I mean, that's like exactly what we've been going through. That one was on July 22nd, but that can be accessed on demand. So SBA has partnered with a company called agilityrecovery.com, and their link is on the SBA website to look at those past webinars that are recorded and you can watch on demand. But this is good information to not only for the consultants to know, but also to relate to, the clients to make sure that they're aware and how to prepare for disaster. So I'll go ahead and put those links on the chat so people can access that information.
Thanks, David. We also we ran one ourselves in I think it was July or August, just as the fires were kicking off, which is just like the way life is. With our colleagues from the Mendocino SBDC had put something together, and we ran one of those nationally. And I put a link to that into the chat as well.
Perfect. Thank
Reminder,
you.
please, everyone, put your questions into the Q&A. I've seen a couple of questions turn up in the chat area. It's going to be really hard for Heather or Scott or David to keep an eye on two places. So please put your questions. If you want a question answered, put it in the Q&A. That's the best way to get an answer to a question. Scott's been working through them while Heather was talking. So Scott, back to you.
Awesome. Yeah. Thank you very much, Heather, and thank you very much, David. Very detailed information. As Heather was going over the parameters within the fire loans, it's funny, I was thinking about this. I got a couple questions on this in comments, got text messages. They were saying, well, why don't you guys create a slide that is like the PPP and EIDL that has the COVID EIDL and the fire EIDL. So we'll do that. We'll get that done. That shouldn't be that hard. We'll do a side-by-side, just like rate, term, parameters. Sounds like there is some discrepancy. It's not as cut and dry. Like the COVID EIDL is pretty cut and dry. Seems like the fire EIDL is a little different. There might be a chart of 3 different loans, but we'll work on that. That's a great idea. We can do that before Wednesday. And this is not the first, for those of you that are joining us today that didn't find us last week, this is not the first fire loan update that we've done. We did one last week. Alan alluded to that. So what we're going to try to do is do these. I'm not sure if we're going to be able to do them every Monday, Wednesday, but definitely one day every week. But we'll probably include it this Wednesday as well with our case force. Somebody asked, I don't know this answer. Do you have any update on the executive order relative to tax deferment on payroll? Is that something with PPP or is that different?
Yeah, no, it would be something, I think in conjunction with PPP, but honestly, we're not involved in that. So we do not have an update on that. You may want to reach out to our partners at the Internal Revenue Service and see if they have updated information with respect to that, but unfortunately SBA does not at this point in time.
Okay.
Something that I didn't mention, and I probably should, is that, as I stated, we're dealing with kind of concurrent tracks here, right, with respect to the COVID-19 and then the fires. We also have some economic injury disaster loans out there for civil unrest. So unfortunately, we've got almost 3 tracks going concurrently. But with the COVID-19 economic injury disaster loan, or EIDL, those loans are currently set at a maximum of $150,000. With respect to getting those processed, the agency is working as quickly as we possibly can to get those processed. just to give you kind of an idea of the gravity of the situation, we have processed thousands and thousands of applications. But unfortunately, we still have millions of applications that are still left to be processed. Prior to all of this kind of coming out, February 13th is the date that comes to mind. Prior to that, the agency, U.S. Small Business Administration, had a staff of less than 2,000 people. We currently have a staff of over 9,000 people. So that just gives you an idea of the gravity of the situation with respect to COVID and processing those transactions for all across the country, and then of course the U.S. territories. With respect to the fire and to the civil unrest loans, those, again, are underwritten from a different perspective, a different channel. It's actually a different department within our Office of Disaster Assistance. So those particular transactions can go for homeowners up to $200,000 to replace real estate damage or repair, up to $40,000 to replace personal property, and that would include vehicles. And then for renters, the maximum loan amount is up to $40,000, and that's to repair or replace personal property. With respect to businesses, the businesses under the economic injury disaster loan, whether it is for property damage or economic injury, and again, property damage would be that physical damage, and whether it is to repair or to rebuild, the loans can go up to $2 million for those, and that can be to replace real estate, machinery, equipment, inventory, other assets that were damaged or destroyed during that time frame. Those transactions for businesses are available to any size and private nonprofit organizations. So in a typical SBA loan, we have size standards that we look at, and we want to make certain that those businesses are small under the Small Business Act. With respect to the fires or the damage to these places, we don't look at big or small. We just look at assisting those businesses. So size is really not an issue. The other thing that I would mention is for the economic injury portion of this. The economic injury is actually only to small businesses. So a large business would not be able to apply under the economic injury disaster declarations or channels. With those particular transactions, again, those can go up to $2 million, but we do look at the size standards. So just kind of something to keep in mind. Again, happy to answer some questions. I know that this is a lot of information, and just to kind of restate what Scott and Ellen had stated earlier. Last week, our Office of Disaster Assistance, as well as Julie Klaus, the San Francisco District Director, provided a presentation on what these transactions were. So we're kind of recapping some of that. We don't actually have the PowerPoint that they had created last week, but we can certainly see if we can get a copy of that out to everyone as well.
And the list of resources pretty much covers everything that was in that PowerPoint. So there's some great things in there. There's a three-step guide. There's the declarations. There's maps. There's booklets for businesses, for homeowners and renters, and public assistance pieces. So there's a lot of useful stuff in that. You can download from that list of links.
Excellent, Alan. Thank you.
Thanks, Alan. Thanks, Heather. So Heather, this is a very common question. It's been coming up ever since SBA announced The 6 months deadline for 504 ends this month. I know that's in law or statute, so it's probably not going to change, right? Like, you haven't heard anything that's going to be extended.
Okay, so just to kind of recap what you're stating, I think what Scott is referring to, and correct me if I'm wrong, Scott, but you're talking about the debt relief component through the CARES Act. And what that debt relief component with the CARES Act stated is that the U.S. Small Business Administration would waive all fees on newly originated transactions and absorb the first 6 months worth of payments for both its 7A, 504, and microloans through September 27th. So on any newly originated transaction through September 27th, the agency will automatically pay the fees, the principal, and interest on all of those transactions. With respect to the 504 component that Scott just mentioned, unfortunately, at this time, there's not enough time to close a 504 loan prior to September 27th. The application would have already had to have been in and actually submitted to our fiscal transfer agent at the beginning of the month. So that has already passed. There could be, however, some opportunity through the 7A or microloan channels to gain access to this debt relief component, again, to pay all fees, principal, and interest for a 6-month time frame on newly originated transactions. That you would go to, because these are the 7A and microloan channels, you would go to your traditional bank or credit union or intermediary and apply for that transaction. Keeping in mind that the best thing for an applicant to do at this point is to find a lender who is considered having delegated authority. Now, delegated authority through our 7A channel means that SBA provides that bank or credit union or lender with the ability to underwrite their own transactions without having SBA view those transactions, as opposed to what we would refer to as guaranteed purchase transactions. The GP, or guaranteed purchase transactions, are underwritten by the lender, but then submitted to SBA for our concurrence. In those instances that SBA still has to get involved in the underwriting component of it, honestly, there's just not enough time left. Today being September 14th, the program only runs through the 27th. The sheer volume that is currently in the Loan Guarantee Processing Center does not, it's not conducive to being able to underwrite transactions that quickly. So from the standpoint of an applicant business that is looking to reap some of the benefits from the CARES Act, and again, those 6 months worth of principal and interest payments, you should really look to a lender that is delegated. And our SBDC partners can help you differentiate each of those lending types. But again, time is of the essence, so it really is going to be dependent on that lender's propensity to get the loans through quickly. Again, Scott may be able to speak more about that, but as far as the 504 transactions, unfortunately, that window has closed. It's not a feasible time frame. 504 transactions take much longer to facilitate than a traditional 7A loan does.
Thank you, Heather. This is a good question. Says, how does SBA underwrite an economic injury loan in relation to the fires? Example of a fitness center that moved business outdoors due to COVID and now has been canceling classes due to the unhealthy air. What should the business submit or claim with the initial application?
Mm-hmm. So basically, the way that the economic injury disaster loans work, if you're looking at the economic injury of it, typically what we would do is to look to last year's revenue and come up with a figure that would be conducive for this year. Of course, with this COVID situation, it kind of exacerbates the difficulty of trying to underwrite these transactions. My advice to that small business is to apply as soon as possible, provide as much detailed information with respect to past earnings and revenue that you can, and then the SBA can look at the totality of the circumstances surrounding that business and come up with a figure that we believe would assist you for at least a 6-month period moving forward. Great question.
Thanks. And then says, given the SBA's disaster loan processing volume and the processing time, do any lenders provide a bridge loan while SBA gets their deal done? Additionally, will SBA allow the disaster loan use of proceeds to pay off the bridge loan?
Mm-hmm. So again, another great question. We do actually have an economic injury disaster bridge loan. That program itself is available to a few lenders in the area. The program is, again, a temporary fix just to get capital in the hands of small businesses very quickly. Again, very few lenders are playing in this arena, but those loans are at $25,000, and they can be, again, refinanced or absorbed through the economic injury disaster loan. It really depends on the lender that is involved, on how quickly they can get these done. But if you reach out to your local district office or the Small Business Development Center, they have a list of lenders that are providing these economic injury disaster bridge loans.
Thank you. And then the last one is regarding PPP. I don't know the answer. It says, do you know if they claim the PPP as wages when reporting it to EDD?
So that's, again, a great question. The employees absolutely need to claim as wages because they are being paid through those PPP programs. What will end up happening if they don't disclose that is if the EDD later finds out that there was income for those employees, they will then deny the claim and send an invoice for payment of those unemployment insurance benefits. The same thing is true for our small business owners. If you are a sole proprietor and you obtained a PPP loan, you may not then go through and get unemployment insurance. It really is meant to be an either or. It does not take, it does not allow for both programs to operate concurrently or in conjunction with one another. And truly, the PPP is meant to keep people employed and to supplement those wages. And if you're collecting unemployment at the same time, it's really, unfortunately, going to come back and haunt you, whether that be based on SBA's monitoring of those transactions or through EDD and them coming back and stating that you were already compensated for these particular wages. Why are you then claiming unemployment benefits? So again, and I know that whole unemployment thing was very challenging initially when the federal government was supplementing a portion of the pandemic unemployment insurance. In a lot of cases, we heard feedback from business owners stating that their employees were very hesitant to come back because they were making more on unemployment. In those particular instances, we advise those small businesses to document that their employees, had no resolve to come back, or that, you know, there was a wage gap of sorts with collecting unemployment versus what they were making in wages. And in those cases, we did issue a safe harbor for a lot of the small business owners that had employees that were not willing to return.
All right, thank you. Yeah. It's hard to remember all that stuff because we went over it.
There's so much. There really is, and I know it gets confusing. You know, it's really challenging to kind of keep everything straight.
Well, especially as things, you know, things just seem to have calmed down a little bit on the PPP and EIDL side, and then the fires and the smoke hit our region. So, you know, and the different rules for different programs. We're just so thankful and grateful that you guys from our SBA colleagues are providing that on the that information directly through us to our clients, because we know we see the responses from people about how useful it is. So we want to make sure you guys, we want to say thank you to you guys for doing that as well for us.
Well, that's what we're here for, Ellen, and we just appreciate the partnership with the Small Business Development Centers immensely, because you guys have done a fantastic job with getting the word out about all of these different challenges that we all face right now. So again, we're very, very grateful as well. Thank you.
Thank you. Yeah, it's a wonderful partnership. We appreciate it too, Heather. Thank you very much. Okay, cool. So we went through a lot of questions. Went through some live. I answered some, and
there's one question just got into the
I see that. Yeah. So yeah, it's a great question. M Arcana, which banks will do loans quick to be able to get on the time and get the 6 months help? So there's no banks that are going to be able to do a loan that quick. It's only 13 days. It's not like the PPP loan where they were able to fund it within a couple days. So there is no lenders that will get that money. But there are other, if you need the money really quick, there are other ways to get monies depending on where you are located. There's direct loan funds, stuff like that. But if you haven't already applied for an SBA loan, whether it be a 7A or 504 yet, then there's no way you're really going to get that loan closed.
So, Scott, but Heather was saying if those who have the delegated authority might just be able to do it quickly enough.
So, and that's a great point. Let me just elaborate on that really quickly. So, lenders that have delegated authority have the autonomy to operate independently of SBA, and they don't have to come to us for concurrence with whatever underwriting decision that they've made. They can simply move forward with that transaction. So in some cases, there could be, if you've got a relationship with your current business bank and they're currently doing 7A transactions, potentially you can reach out to them directly and request you know, the expedited loan process to be able to reap the benefits of the CARES Act payment relief or debt relief. But to Scott's point, if you haven't started down that road, it's going to be extremely challenging to try to find a lender or to get anything accomplished in the next 13 days. So I totally validate what he is saying. Again, but if you're a small business owner on the line right now and you've already got a relationship with your business bank, no harm, no foul, up to them to ask.
Check if they've got that delegated authority, in which case it might just be possible to squeeze in.
Exactly.
But
exactly.
Yeah. All right. Well, we've had a couple of minutes with no questions, so I think we've reached the end of the questions that people have. So do you want to just like cover the next couple of things on the slides and we'll tell people what's coming up?
Yeah, definitely. Yeah. And then if there's a couple of questions that float in, they float in. So the rest of the month of September, You know, when Alan was at the beginning of the webinar, he was talking about, you know, this Wednesday is going to be the 60th webinar. I was trying to do some quick mathematical calculations to see if we would hit 100 before the end of the year, and unfortunately, we're not, because we cut back. We're not doing 3 a week anymore, Alan. That'd be amazing if we hit 100.
You're really into the numbers, aren't you? You're a numbers guy. That's the whole thing. You like big round numbers. Yeah.
Yeah. So we are going to continue through the month of September. We haven't quite figured out a calendar schedule for October, November, December, but we are going to continue to bring live updates for you as fast as we can and as current as we can. So this Wednesday, we'll go over COVID updates, fire updates. We have our case force. Hopefully you bring together all your great questions for attorneys. We haven't had a lot of questions, but we'd love to get you all excited and psyched up before Wednesday to get those questions in for the attorneys. The 21st, 1 week from today, we'll go over disaster loan updates, and then we have an HR advisor, Linda Sinyard. She's on our regional team to talk about HR and some of the new updates. And then the 22nd, same thing, case force, that's our attorney coalition. The 28th, we'll do same updates, and we'll go into credit repair. We have one of our advisors, Pat Wally, talking about credit repair on the 28th. And the 30th, to finish out the month, would be one more case force. So here's our upcoming webinars. These are as current as the 15th. So tomorrow, I can let Alan go over these if you'd like.
Yeah, so we're doing some stuff on SEO. Well, a whole bunch of e-commerce related pieces. So tomorrow we've got someone talking about how to get your search engine optimization, so how to get noticed on Google. On Thursday, we've got a thing on opening your Facebook shop. So we did a webinar in July on using social media to sell. And one of the things that came through from that is people wanted to know how to make use of the new Facebook shop facility. So we have a webinar that one of our advisors, Learning a Lot, is running on that on Thursday. And then, you know, a couple more on, one more towards the end of the month on using Shopify to set up your own Shopify shop. And then some stuff around finance. So we've got how to take control of your credit during a pandemic to make sure your credit's good, and managing and forecasting cash flow. That is on the 1st of October. And then we've got a session, or a repeat session on diversity inclusion in the workplace, how to ensure that your workplace match is having the best part of getting the benefits of being diverse and inclusive. So that's when that's on the 22nd. Chandra Anderson, who did one for us, and we got some great rave reviews, so she's coming back and doing that again. And then into next month on the Thursday, the 13th of October, Shane Barker is doing like that quick version of, you know, how to get your business online and start generating sales. So really that you know, 1 hour of everything you need to know about that to get you started. So a whole bunch of stuff coming up. If you go to SBDC events /network calendar, you'll see all links to sign up for all of those, but also all the different webinars that all our centers across the network are doing. And there's 25 plus centers running webinars. And because everything's a webinar these days, you can do, you can be in Santa Cruz and do a webinar from Mendocino. Everyone's happy for you to do that. So lots of, if there's any topic you want to learn anything about to help you as a small business, it's happening somewhere in the NorCal region over the next month or so, as well as the ones that, like David keeps telling us about from the SBA.
Awesome. Thank you very much, Alan. He's right. You technically could just chill at home all day and listen to webinars if you really wanted to. But yeah, so we have lots of, and they're all at no cost, which is great. They're teaching you all different aspects of growing and keep your business alive. If you have questions, you can still call us at 833-ASK-SBDC. You will not only be routed to a finance center advisor, you'll also be routed to the local center near you. So we kind of changed the phone structure or tree so you can get routed to your local center, makes it easier, which is great. You can still go to AskSBDC.com, find out about these webinars. You can watch these ones. You can find out about the new upcoming webinars that Alan just spoke about on the website. You can still email us at loans@asksbdc.com. As September 27th passes, and if you haven't applied for an SBA loan now, it's not going to, close fast enough for the 6 months. But if you still need money, we're still here. I went over available other monies, and we can help you take applications and get that going immediately. And then if you speak Spanish or you want to hear this in Spanish, you can email us at espanol@asksbdc.com. California Hispanic Chamber does an excellent job working through all of what we did here in English and Spanish, which is awesome. And yes, it's 11:28. We answered all your questions. If you have a few more questions, you can put them in the chat, but probably going to sign off at 11:30. We thank you very much for joining us today. We thank you very much, Heather Lutzy, for the updates that you did on the fires. Very detailed information. So thank you very much for going over that fully.
Absolutely, my pleasure. Thank you guys for the invitation. And again, I realize that there's a lot of information out there. There's, it does get confusing. Don't hesitate to reach out if you have any questions or concerns. And then I think, just for a closing remark from my perspective, be very, very careful nowadays. Unfortunately, we are finding a lot of scammers and schemes going on with respect to identity theft and fraud instances. So please just be diligent. I think it's really, really important that if you are not in the position in seeking a loan, put a freeze on your credit until you are. I think that's just a prudent thing, or consider a credit monitoring system currently. And again, it's very, very unfortunate that at desperate times like this, we come across, really some really bad people. And I would just caution you to keep your credit at the forefront of your mind. It's very important. Hey, Scott.
Yep. No, I agree. I agree with you. We've seen a lot of fraud too on our end. So yeah, no, I agree with you 100%. So thank you again for joining us today. Thank you for being here. Thanks for asking the questions. We will rejoin you on Wednesday at 10:30. We'll have more updates, and then we'll have our attorneys on the call. So please get your questions ready. There's some of you that ask questions around landlord and tenants and stuff like that. So we don't really have those answers, but the lawyers might. And yeah, so thank you very much. Have a great Monday, and we'll see you soon.
Okay. Goodbye, everybody.
Bye.